Hello, everybody. Good day, good morning. Welcome to Face if you're new. So, you know, trading is a process that you're constantly reassessing as new information, or in our case, technical action dictates everything's price action, right? You could have all your biases and everything, and you have to go with the price action. So I'm not sure what causes spike in the Dixie. I'm not a big one on news flow. At times to my disadvantage, at times, maybe it would influence me and I wouldn't do what works. But as I look at the dollar here, this spike here, check it out on the daily, went right to the 50-day, right there. I mean, a few pips away. And this day right here, if we finish like this or better, I'm reassessing. I was looking to sell a rally. Maybe if it had not done this and had rallied first before it did this, it would have been a different story. But when I wake up and I see a candle like this, and most of you guys by now know that my one trick pony act is a three drive action, that now I look at it and I see one and I see two, and it looks like we're going to get a new high for a third. Maybe we trade at par on this. So we'll see what the ECB can throw at it. It looks like it already tried to. So also with the euro being weaker than cable, that's kind of negative. So we'll see. It's not great action in the euro, not as bad in the pound. But when I look at the Dixie here on this daily candle, I can't fade it. Okay. Looks like fat finger. Okay. Thanks, Joe. Yeah, maybe it was. It happens a lot in the dollar, Joe. In fact, when I was looking at Friday, we had this, and I didn't know. It was, I think, after the close Friday, and I didn't know what happened here. I figured maybe some news or something, but we'll see if we're going to just get a failing rally. Right now, it looks to me like there is a possibility that we get one more high in the Dixie. If you want to be a seller, this probably isn't a bad zone between here and here, but I'm just going to hold off. I think there are a lot of things, I look for turning points. And I think there's going to be a lot of turning points into the Fed because the whole world, all the world global financial markets are hanging on the Fed, probably much more than the ECB. So if the Fed just, gives a token ease, the dollar could blow one more time. So with that being said, the turnaround Tuesday trade in gold worked for a bit. Okay, we had an $8 rally and then we went back to new lows. But this is a real critical area. So you would think if the dollar is going to make a new high, that this correction in the gold would continue. But you see how important this is. This was a throwover line. I think I've showed it a few times. And, it still is possible that when I look at this 1 hour in gold, that maybe we're going to get a three. See, this is one and this is two, and maybe we get a three. But if we get through this, what's containing it on the 1 hour is the 50-day, is say at 1494, 1495. There's a lot of space for at least a bear market rally. And in fact, silver looks better because silver made a higher low here while gold has made a couple of new lows. So I think 1850 at least is viable. Steve showed something yesterday for a path for a bear market rally before a continuation to the downside. Also, oil, we had this breakout. Here's the breakout line. And we tested it yesterday and came off it, held it. Really, this is a key. 57 is a key to have a false breakout. Right now, it looks like it could just be one or an A and a B and a C, maybe back to the breakout one more time. I'll let a market test a breakout twice, but if it starts happening more than twice, it's telling me that Mr. Market saying, okay, yeah, you missed buying the retest here. I'll give you another chance here. But if it gives you a third chance, become skeptical. I've seen it many times where you have multiple chances, and you should look at that. If the market's making it convenient for you to do something you should have done prior, better to have a jaded eye when it comes to that. Yen's still moving up with yields, but the yields are now at a pretty important level here. Here's your 10-year up around this 180 level when you look at the daily. I think is going to cap it. If it doesn't cap it, yield to bottom. Something I was talking about, and Steve pointed out the balloons when they top. Here's TLT. I mean, so far, pretty negative week. I thought we could pull back at least to 38. We're almost there. So right now, this is a non-touch for me, but keep an eye on this 180 level. In the 10-year, we get back above it, we could see the 10-year back above 2%. So that's kind of what I see so far. S&Ps, I see no reason why, unless we start closing back under the 78.6 level, that we can't get one more push into the Fed. So I'm looking for a lot of inflection points into mid-month. Mid-month, you have the Fed. Call me a lunatic. There's a full moon next week. I believe it's on the 14th. So maybe it's over the weekend, but I'm looking for some more turning points. Also, the reason things have stabilized is because of the yuan. Okay, now the yuan is still good, and I don't think it turns bad, which means the yuan is weak, unless we close back under this breakout here. See, this was a very critical level, and we had a test of it, but we could pull back and risk on could continue all the way into, say, here, 705. There's, yeah, maybe back down to here. But this doesn't look complete to me either. And if the dollar is going to make one more run to new highs, I would assume that the yuan's going to make one more run to new highs too. Pretty manipulated currency, but this is a trade war right here. So I don't know, maybe we get a deal in the Fed and we have euphoria into the equinox. That's another important time period to be aware of. Gann believed that in time more than price, and the changing of the seasons is pretty important for potential change of market directions. Oh, yeah, actually, I had a friend who passed away whose birthday was on 9/11. So, yeah, it is the anniversary of what really changed our world and actually changed the United States forever because of the Patriot Act after 9/11. And we gave up a lot of our civil liberties to be safe, quote unquote, safe and be protected. And now we're protected with so many powers granted to the presidency because of the Patriot Act. Anyway, so here we are. Let's try and find a way. I don't see anything I want to jump on right away, and I'm sure the rest of the team does. That's a great thing about having a team. Is I don't know about you guys. I don't find things to do every day. Okay, and great trades don't come your way every day. Reversals and turning points, maybe you get a few a month. And it's really not how much you trade, it's what you do when you trade. So volume is great for your broker. I don't know if it's so great for your account. So we have the best promotion of the year coming up starting next week. So the best promotion to get the best value with the best team in the FX world. So go to your piggy banks and get ready to have a great fall trading season with us. There's going to be a couple of great offers for those of you that are a little bit more part-time. I'm not going to let the secret out, but there's going to be something for you that, or for smaller traders that trade with, say, you know, $500 or $1,000, and they're trying to learn how to trade. Maybe, you know, maybe over 100 a month doesn't make sense to them, and we're thinking of you. I'll just say that we're thinking about you guys too, because we want to help everyone. Because someone who might only have $1,000 to trade with now, and the only difference is size, you do the same thing. If you could trade successfully with $1,000 by reducing leverage and trading with micros, and now they have micro S&Ps, which I think is a great product. I'm not sure about the liquidity yet, but you know, we want you to be able to learn and participate and not have a lot of our stuff be out of reach for you. So get ready for next week to become part of our community. How are you today, Blaker?
Hey, good morning, Coach.
How are you, bro?
Good. I just wanted to first of all say, for those of you that were affected by 9/11 years ago, or it was you're right. It was a defining moment for our country, the United States, and it's a day that I have to take a moment every year to really think about things in a broader scope and realize what's important to us as humans, and it was a it was a defining and very very tragic day for the United States. So I was always try to take a moment to remember what had happened, and who was involved, and how things really affected our lives as a nation. So anyway, today is pre ECB day. So it is pre ECB day. And right now, we're seeing the euro dollar come under pressure. The euro broke through this triangle. We were monitoring a triangle yesterday, and we broke through uh, actually overnight, and it looks like we've hit what could be channel support now. It's near the 50% retracement. I had a bid in the euro at 109.90 to get long. Hasn't been hit yet, and I don't know if it's going to get hit, and I don't know if I really want to chase it higher as of yet. I was long some euro Aussie overnight, and um, just got stopped out of that actually just a little while ago, and so I'm trying to play it light ahead of the ECB, so I don't give away too much of my monthly profits already. But the euro has dipped to a level where I do find it attractive. I do want to see it dip a little further if possible. I'd like to see it at the 618. If you haven't seen it, the euro dollar is actually respecting the 618. It did it on the upside. You can see here on the bounce. I expect the dip to be contained by the 618, which would be 109.86. So I'm hoping that we can get a little move down there to allow allow us to pick up some longs ahead of the ECB. I think a lot of the euro move that you're seeing right now is option related. It's also, everybody's really dovish. I mean, people are expecting a fresh round of quantitative easing to come out of the European Central Bank, and most of the banks are really really quite dovish the euro. So I think you're seeing a lot of euro selling, and as stocks continue to rally, euro is a funding currency, so you're going to get a natural buy the dollar, sell the euro, kind of more or less sell the euro across the board as long as stocks continue to stay higher. And as you guys probably know, stocks continue to stay strong. I mean, I do think that we're nearing some resistance, but that doesn't mean that we're going to turn today. My thoughts is like what I said yesterday is that I feel that the ECB may not do what the market hopes, and if that is the case, you're going to see some euro selling, or excuse me, euro buying, stock market selling. But we have to wait for tomorrow. So today we could continue to see the stock market grind higher. One other chart I want to bring to your attention, and I actually sent out the chart for ForexAnalytix. If you guys get ForexAnalytix, you can see this basic technical analysis on the DAX. We've about completed this inverted head and shoulder pattern. It's been on, our radar for the last week and a half, and I feel silly for not enacting a pattern in play on the DAX, which typically when I see a pattern like this, I'm going to put one on, and I didn't, and which is silly because we've pretty much completed the chart pattern, and we're at the 78% retracement right here. You can see right at the 78% retracement, we're approaching the underside of the trend line, and the DAX is nearing some pretty key resistance. So you got to be a little bit concerned, or let me take that back, a little careful with risk appetite as the S&P. Like I said, we're underneath this broken trend line. We're probably going to attack the 88% retracement, which isn't too much higher. It's 3,000, so another 17, 20 S&P handles. DAX is nearing some targets too. So like I said, you got to be just a little bit more careful with your quote unquote risk on trades. The yen, let's talk a little bit about the yen. The dollar yen continues to be strong, and all the yen pairs too. I mean, we just have weak yen, strong dollar buying, but you can see the dollar yen is pretty overbought on the 4-hour chart. You have the euro yen. Well, the euro yen's actually showing a little bit of weakness because the euro's been weak. The pound yen still has a double bottom, but we're overbought, divergent on relative strength. You can see the RSI has stopped moving higher on the pound yen. Aussie yen, very similar. We're pushing previous support, current resistance. I do have an Aussie yen short that I'm trying to work here, but it still continues higher, but relative strength is also diverging. New Zealand yen, spike low, previous support is acting as current resistance. The New Zealand yen starting to struggle, and the Canadian yen is up near some trendline resistance here, some pretty key trendline resistance in the Canadian yen as well. So these yen pairs look like we could stall. So what I'm trying to point out here, guys, is that stocks look a little frothy at current levels. Risk appetite seems a little frothy at current levels, without any concrete evidence that the U.S.-China trade negotiations have completed. As long as we're still in limbo right now, then you have to be careful with all of these pairs that are pushing up against these yen pairs pushing up against some resistance, and stocks are strong but not they're looking a little frothy, I guess is the best word I can say. So if you're a long risk appetite or something that is expecting risk on, then you have to be more cautious. I think you got to keep your stops tight. You got to keep everything kind of close at this point. Another chart I want to bring up for you is I want to bring up the bond market. Now, the bond market had a really, really awesome day yesterday. Bond yields did. So you had a sell-off in the bond market. We finally rolled out of this channel. We rolled over, yields went up. Everything's hunky-dory. When you see bonds come down, yields go up. That typically will be weak for the precious metals. But as my chart of the day yesterday in gold has come down to some pretty key support. We're at 50% retracement. We got a lot of trend lines intersecting at these levels. I expect gold to find some support, and you have silver too that came right down to trendline support, which I didn't buy yesterday, and I'm still a little irritated with myself that I didn't pick up silver as it dipped towards this trend line. But what I'm trying to point out is that we could have the bond market find some support ahead of the ECB. We have precious metals that are finding a little bit of support. We have, stocks that might be a little frothy. So I guess what I'm trying to illustrate right now is try not to get too excited about where we're at with risk appetite. Okay. We are at levels that might start to show some resistance. Like I'm looking at some of these yen pairs. Like I'm looking at the New Zealand yen. I have an Aussie yen short, but I'm looking at the New Zealand yen as being a possible short up here. I mean, we're in a very, very strong downtrend, as you guys know, and all we're doing is we're probing. You can see it right through here. All this previous support through here is all coming right into play, and we're struggling. And so I think the risk is starting to build that we, can't break higher in whether it's the New Zealand yen, the Aussie yen, some of these yen pairs, and we might resume these downtrends soon. But that would also come with, that would come with stocks showing some resistance up here as well. So we'll see what happens. I don't want to go through all of these cross rates and all the rates, because I know Steve and Stelios are here. It is still the day before ECB. I do expect the day to be kind of slow. We do have producer prices that's coming out in about 9 minutes that might move the market, but after that, I'm expecting a fairly slow session today, once again, as we go into tomorrow, because tomorrow's the big kahuna. Tomorrow's what everybody's been waiting for. I mean, yesterday was brutal. Stelios, Steve, are you guys here?
I am.
The last couple of days have been absolutely brutal with volatility. Volatility has been at almost zero. I mean, I can't tell you the number of times the last 2 days I've sat in front of my computer and I almost fell asleep at my desk. It's been brutal, hasn't it?
It has, but I can't personally complain that much because, as you know, I'm busy with other stuff, these days to get everything ready for Monday. So it's been kind of a blessing for me.
Oh, what's happening on Monday?
Oh, what's happening on Monday?
For you guys that don't know, that we have our seasonal offer for ForexAnalytix coming on Monday. Dale kind of alluded to the fact, and this year is a big deal. For those of you that are, you like ForexAnalytix, you like what we do here, you're like, oh man, I wish I had the app, and we're going to make it more accessible for you, for ForexAnalytix, not for the the full version, but we have another version of ForexAnalytix that's going to be coming out, and it's going to allow you guys to have this analysis on the fly, even for those of you that with maybe that are more looking for a budget friendly solution. So it's pretty exciting stuff, and Steve's been working around the clock on our seasonal offer, which is our always a big deal for us as a company, because we offer ForexAnalytix at a great price as it is for a week or two, and that's coming out on Monday. So if you guys are patiently waiting for that, just know that on Monday, ForexAnalytix will be available to you guys at a steep discount, steeply discounted rate. So it's been a little slow. That's been a blessing for Steve. Stelios, what do you have to say about all that?
Yeah, slow markets. It's not a bad thing. We have I still had my kids until today, first day at school today. So having slow days is probably not a bad thing. But yeah, we brought out the champagne today.
You know what I wanted to note about like the cable, for example, and I know we focus a lot on the cable when you're here, because I like to talk with you about the news stream, especially you living in London for so many years and very familiar with the UK Parliament and politics and what's happening there. But the pound has been surprisingly strong. It has not really backed off. And, with the euro weakness that we've seen, I would have expected the pound would have sold off a little bit more. But frankly, the pound's actually holding up pretty well. And we've got to note that. I mean, as traders, we've got to note that the pullbacks have been minimal here.
Yeah, and you also have to remember that today we had, it was a minor headline, but still there was a Scottish Court of Appeals that ruled that the Parliament closure, basically until 14th of October, they ruled that it's illegal. I mean, effectively, it's not really going to change anything, but even that didn't manage to move the pound at all. And I think it's with the UK Parliament closed, we've been discussing this on the chat room with Nitish and the other guys and girls. With the Parliament closed, the risk is probably for positive news, if I want to say that, because what's happening now is Boris Johnson and other UK people are going over and talking with the EU guys, and there's visits here, visits there, and we know what the status quo is. And I think at the moment the surprise. Odds are that it's going to be a positive surprise rather than a negative surprise. Of course, we can get either, but I think the chances are more for a positive surprise. So
you're saying there's a chance?
1 in a million. That was a good. That was a good movie.
A great movie. Anyway, the Liar, right? Yeah.
No, that was Dumb and Dumber.
No, that's Dumb and Dumber. Dumb and Dumber. Sorry.
That's Dumb and Dumber. Yeah.
All right. Well, it's interesting because the cable has not pulled back much. And I mean, if I was short the pound, which I'm not, but if I was, I'd be like, it's not coming down. And I think the place that everybody's got to be aware of, and I know we talked about this till we're blue in the face, is break back above 123.70 or 124 level if you really want to be.
I wish we could see all the stops above there. It would be amazing to be.
There's got to be some liquidity up there, I would assume. Yeah, Steve. There's probably got to be. So any move above 124, you got to imagine there's some probably bigger stops up there, because people are going to have stops around the 123.70, 23.80, but really 124 is where it really starts to get interesting should we make our way up there. So. But I think always a risk that we're holding on, to these gains and not giving it back. So I am going to pass it over to you guys before the producer prices. But I do want to mention, guys, if you have not visited Forest Park FX, make sure you do so. They are our webinar sponsors. And if you like what we do here and you like this webinar, one of the reasons why we can continue to do this is because of Forest Park FX. And if you want to join the reimbursement program and try to get ForexAnalytix for free, talk to them right on Skype or the email that this will contact you directly to them. They're just going to help you find a broker that's best suited for your needs based on what your account size is, how frequent you trade, what you're looking for. They're going to help you out, and they just want you to succeed, because if you succeed, they succeed, we all succeed. So they're going to try to find you the best fit. So make sure you visit with Forest Park FX, and I'm going to pass it back over to you guys. Have a great day, everybody. And tomorrow's going to be an exciting day for the ECB. So be ready for it.
Thank you, Blake.
Good hunting, Blake.
Thanks, guys. Thanks, Coach. Have a great one.
So if you can't see the forest from the trees and you're looking for a broker, you could do it with ease at Forest Park.
That's good. That's really good.
All right. So, yeah, and they're great guys. I know them both.
They are great guys and extremely knowledgeable.
Ethical. Yeah. They know compliance. So let's face it. One of them's a lawyer.
Right? Justin is a lawyer, but not only that. I mean, they really know the industry very well. I mean, they can help you find the best brokerage firm for the kind of trading that you do, because not all brokerage firms. I mean, there are
created equal.
Yeah, there are some. There are more than a few good ones, but it's not only a matter of trust, which is of course A to Z. It's the most important element. But it's also, by the way, let's have a look.
5 seconds.
For PPI, let's see. what we get. Any second now. There we go.
Okay, year on year, slightly better.
Yeah, everything slightly better than expected. Yeah.
Yeah.
And just think about all the time that they spend having to research the 2 or 3 choices we have in the United States.
Plus.
I mean, I'm going to research. It's going to take me at least a month to research the 2 choices that we have in the U.S.
3, actually.
We have 3. Oh
yeah.
What that one came back.
Exactly. I mean, since
what's their name? Very big broker.
You want me to name it? I can. But
go ahead.
IG.
Okay. Yeah.
Yeah. So they came back. 1st of January 2019. Actually.
They really never left. They had a binary broker operation. I forgot the name.
Oh yeah, whatever. But now you have having to do with Forex. Yeah. You have 3 options in the US. It's Oanda.
3 drives to a broker.
Yeah, it's Forex.com and it's IG. Those are the 3 choices.
Look for divergence.
But in Europe, as you know, we have plenty more.
In Cyprus, you have about 1 million. Right?
Yeah. Personally, I would be very skeptical about putting my money anywhere there, but that's a different story.
Yeah, after the bail-in, I took my last 10 euros out of there.
Okay.
So what do we do here, guys? What do you think? Got to sit on our hands again?
Yeah, why not? Strangers might have some, new jokes.
Actually, I've got nothing out of the UK, so they're all having their second holiday. I don't know, but
you remember I said it quite some time ago, and people thought that I was making humor, although it was like half joking but half being serious. One of the only probably good thing I can think of, which has played a role with this whole Brexit mess in the UK, is that everybody's focused on that, and they're not really legislating about anything else, which is a great thing, considering that if you look at the history of almost every developed country. They tend having to do. Now I'm focusing purely on the economy, right? I mean, not on other stuff, but if we want to focus on the economy and legislation, the more the years pass, the worse the legislation is for promoting the economy's productivity. Usually, we get more regulation, we get more, more obstacles. So at least they, left the economy. Economic freedom has been left function, however it can function, which is a good thing.
Yeah, that's scary what you just said, but yeah.
I know it's scary, but unfortunately.
Yeah. So really the only thing of note, I mean, it was a very quiet session overnight and this morning. The only thing of note is that the Chinese announced that they're going to exempt some of the US products from the tariffs, the 25% tariffs that are in place for a little bit of time now. But it will exclude most of the agricultural items, which are really the ones, the burning ones. So, it's a small move, but nothing really that's going to move markets considerably. Yeah. I think we're all waiting.
Yeah, another thing probably worth mentioning is, I don't know if you saw Trump's
tweet.
Yeah,
well, he called them boneheads. I mean,
no. You're in my opinion, you're focusing on the wrong part of the tweet.
What the fact that he wants to restructure the debt?
Yeah. For those that haven't read it, with Trump, I get more questions and answers always, but. The Federal Reserve should get our interest rates down to zero in capital letters or less. And we should then start to refinance our debt. Interest cost could be brought way down, while at the same time substantially lengthening the term. we have the great currency, power, and balance it. So, and then he goes on to rant, there's no inflation, Powell doesn't know what he's doing, and he's calling them boneheads. Yes, indeed. So, first of all, it's a little bit embarrassing if he doesn't know that the Fed has nothing to do with bond maturities. So he's barking on the wrong tree, having to do with, that last part of the tweet, that part of the tweet, right? I mean, that all has to do with the Treasury and nothing to do with the Fed in essence. Now, the second question is, he wants lower rates and he thinks he's going to achieve that if they issue and try to refinance more than 22 trillion of debt in, let's say, 20 and 30-year maturities. Imagine what's going to happen. First of all, nobody's going to be talking about an inverted yield curve anymore, right? Because the yield curve is going to go, it's going to fly to the moon. And financing the debt like this is going to be a disaster because it's going to get costs, skyrocketing. Now, on the other hand, probably the dollar is going to be, destroyed, completely destroyed. And, I mean, if that's what he's looking for, but then speaking about the purchasing power of the dollar, that's going to be a huge issue. And then he's going to find out what inflation is. But, calling the Fed boneheads, they obviously are. I mean, he's right about that, but not for the reasons he implies. Anyhow, quite an interesting tweet from a president.
Yeah.
Hello, one question. Why neither of you use MACD in your analysis? That's a good question. I can answer that. Never saw a graph of yours with the indicator. Yeah, because there's no real point to use MACD no. Let me take it otherwise. There are several different, one of the most popular type of indicators are momentum indicators. Okay. Stochastics, slow, fast, MACD, the RSI, CCI, you name it. In essence, whichever of those you choose to use, they tell you the exact same thing. So then it comes to the question, why wouldn't you use the simplest and most popular one? Because part of technical analysis is to know what other people are looking for, or what other people are actually seeing, or what other people think they're seeing. So that is why the vast majority of technical analysts, after going through and testing and using all those indicators that I mentioned, and probably more than those, I've used them in the past, I can tell you as a fact, they usually settle back for the, good old RSI, the usual one, the 14 one, the 14 period one. And, that's it. Once you know how to read any of those indicators, you will extract the exact same, messages from it as you would from a MACD or whatever else. So, that is the answer to this fine question, Vasco. Are there any good currency strength meter to use? Are there any good currency strength meter? Now, let me, probably you mean like a relative strength, like, showing you how currencies are performing in comparison to each other. Actually, that's an interesting question. Yeah, there are some. We're actually building one in ForexAnalytix at the moment. We should launch it within the next couple of months. So yeah, we're going to be offering something like that as well. It's going to give you like a fast outlook of which currencies are like overperforming in the day, which ones are underperforming, etc. But yeah, you can find several. Again, they might be built a little bit differently, but they show you more or less the same thing. Let me see other questions. Okay, we have questions about the Aussie CAD, the Kiwi CAD, the Aussie Kiwi. Okay, then let's start from those pairs and keep the questions coming, and we're gonna go over the rest. Obviously, we're not so much in a rush because, as Blake mentioned before, it's not that we've had much happening since yesterday, so it's not that we have to cover the whole board. So let's start by the Aussie against the Kiwi, which is indeed an interesting pair in the sense that the Aussie against the Kiwi is currently at major resistance. You can see it here, okay? Horizontal resistance area, 50% fib. You can even view this. Let me annotate on the chart. Draw, let's put something that will show clearly. Okay, so you can even view this as a range, right? So, you know, any way you look at it, let me make it thicker. There you go. You can even view this as a range. So 107, quite important resistance area. If we break above it, you know, there is probably going to be a squeeze higher. I would be looking then for 108 is the 61.8, but, you know, I like more the horizontal support resistance area close to 1085. So I think that, you know, if we clear 107, we're headed like 150 pips higher, which, you know, considering that this pair is not really a fast mover, is not that bad of a distance. But on the other hand, obviously the risk reward currently favors, you know, attempts to be short against the highs, okay, against, let's say, 107 and change. So that's the situation. We're currently on resistance. So, you know, you're either trying to fade this here or you want to buy the breakout. You know, it's, you know, your choice what you want to do. Okay. Okay. So now, Aussie against the CAD. And as it seems, a lot of interest for those crosses today. So Aussie against the CAD. We had this conversation, I think, yesterday or the day before yesterday, as you can see. You know, depends on how you want to draw it, you know, a little bit lower, a little bit higher. Seems that we are in a consolidation. You know, that might be a bearish triangle. If we break below there, you know, you can expect a decent continuation lower. On the other hand, you know, for me to be, you know, looking higher, I would definitely want to see a move above 91 cents. So basically, because there is always, don't forget that in this kind of formation, there is always the chance that this is not a triangle, but a flag of some kind. Like, so this can be an interpretation as well. So in any case, as you see, as long as we remain below 91 cents, I think the path of least resistance remains to the downside. Above 91 cents, it's a different story to talk about. Kiwi against the CAD, there is only one possible bullish interpretation here, and that is, you know, that this was a wedge, which we've broken above, because, you know, it looks like a nice interpretation, but how do you know? I mean, if we keep on moving lower, if we rebound a little bit higher, it might be a channel or whatever. So yeah, there is, you know, there is a little bit of a possibility that, you know, this is some kind of a wedge that we broke above, in which case, you know, we might see like a larger rebound. But as you see so far, the price action is really, you know, not hinting of much strength to come. So, you know, I would be quite skeptical. I wouldn't be trying to buy here the Aussie against the CAD. Might work, but, you know, there is a chance, there's a very good chance it won't. One thing you have going for you, if you actually want to be long, is this. You can see here that 83 cents is quite a strong horizontal support area, okay? And, you know, we're just above it. I mean, we rebounded from just above it. So, you know, I mean, I can't blame you if you really want to be long for some reason, if you have some fundamental reason that, you know, you believe that the Aussie is going to overperform the CAD, sure. I mean, you can try to do that, but, you know, don't be short. Sorry, don't be long if we go below 83 cents. I think that's going to be a very, very, very bad idea. Now, one of the reasons I'm quite skeptical with this is because of what's happening with crude. Of course, you'll tell me, why does it really matter? It does matter, because now that we've broken higher here in crude, and if this proves to be, you know, the case, so far, I mean, we've already spent like 2.5 days above this descending trend line. That is, I mean, a bullish any bullish development in crude is an extra argument to believe that CAD might overperform the Aussie or the Kiwi. In which case, obviously, that points to further losses for the Aussie CAD and the Kiwi CAD. Okay, so with crude likely breaking out to the upside here, it's more of an argument to be looking to be long the Canadian against similar commodity currencies that are not influenced positive by what crude is doing than the opposite. Speaking of the USD CAD, since I don't think we had a look at it yesterday, it's not a bad idea if we have a look at it today. If you remember, I was quite clear once we posted that reversal there that I believe that now that we've broken this flat top triangle, we're probably going to head back to retest this long-term ascending channel. You can see that, this is a formidable formation, right? Technical formation. There is no real way that you can see at this channel and how many tests the market has had at it and consider it, coincidental or, a random formation here. I do think that it is quite important from a technical perspective. And I do think that, that's going to prove to be the case once we end up having some kind of a breakout, breakdown, or whatever from this channel. Now, being quite close to support, obviously the chances currently would be, that it's more likely to break down than to break higher, because in order for us to break higher from this channel, we'll need to rally quite significantly. This channel's resistance currently passes from 140. So, we first need to make it from here to 140, which isn't going to be 140 because since it's an ascending channel, by then resistance will have, moved even higher than that, like 141, 142, who knows? And after making it there, actually ending up breaking the upside. So, no need to discuss such a remote possibility from where we currently are. But one thing is for sure, support currently passes just below 131, which means that we're like, 60, 70 pips above a possible bearish breakdown to a multi-year formation. And that's what you should be focusing on, because we are approaching support. So yeah, if you want to buy the USD CAD, there's your opportunity. I said the same thing when we were down there. And if you had done that, you would actually have made some, decent money. But on the other hand, there is always the risk that, it's going to test it, it's going to test it, it's going to test it at some point, it might test it and fail. And if that happens, I'm quite sure that, the continuation lower you're going to see is going to be quite sharp. So, if something like this happens, I'm pretty certain that, we're going to be trading at 128, within probably like 1 week or, a little bit more than that. So USD CAD definitely, a pair to watch very closely. USD NOK, not as close to, channels support as the USD CAD is, but I would still favor any rebound towards 901. I think is a decent sorting opportunity for the USD NOK. And obviously, same deal here. If crude accelerates higher from here, it should help the NOK overperform the US dollar ceteris paribus. Of course, if for some reason a lot of dollar strength comes through the market, crude doing well, which is less likely, obviously, because crude moving higher while dollar moving higher is not impossible, but definitely that's going to be a headwind. Okay. So, if a lot of US dollar strength comes through the market, obviously, the NOK is going to be mostly, the US NOK is going to be mostly be influenced by that. But ceteris paribus, crude doing well should help the NOK overperform the US dollar, in which case I would be closely looking at this confluence, triple confluence supports currently at 881. I remind you that this 880, 882 zone was resistance for a long period of time. We tested that multiple days. We failed in every single occasion until we finally broke out in July, last day of July, actually. So, a move back to 880, 882 is going to be significant. It's going to be multiple confluence of supports there. a rebound from there is going to be much more likely than a straight forward move higher from where we are, especially after having seen this pullback. Okay, let me see what other questions you have. What do you think about gold? Sure. And EuroCAD, more CAD. Okay, so let's go. Let's have a look at gold. And then let's have a look at silver, since we're going to be there. By the way, Coach, I don't know if you're here. There we go. So gold. There we are. So quite a sharp move lower. I showed that yesterday actually on the 4-hour chart, so we might as well do it again because it gives you a better understanding of what's happening in the short term. There you go. So personally, I'm very, very skeptical that gold can find support like immediately here and, push right to new highs, like above 1556. I find it very, very unlikely. So in my mind, any rebound from around this area, which is a likely possibility to rebound from this area, you can see why if you look on the left side of the chart, is probably going to lead to a short-lived rally, which is probably going to find sellers for likely one more move lower before we can reestablish the uptrend. So I'm short gold, half of the position. I'm, in the money, quite a lot in the money actually. And I feel quite fine about it. I'll probably be selling more if we get a rebound from here. And, the same deal here with silver. I think that any move towards like 1550, 1560 is probably a good sorting opportunity for silver. I mean, we drew that out yesterday. As you see so far, it's been moving along like the line, we roughly envisioned. So I do think that the same applies to silver. Probably at least one more leg lower before seeing higher prices again. So I wouldn't be jumping the gun trying to buy precious metals just yet. Keep in mind that they were rallying for a significant amount of time, and usually there is some, proportionality between, the impulse of a move and the correction of a move. I mean, let's say this last rally in gold started August 2018. So we're now like 13 months later. So this move higher lasted like 13 months. We can easily end up having a few weeks of a corrective move, right? So I think it's quite dangerous trying to buy it already. I'm not saying that the trend doesn't remain higher. It does, but I think it will take more time to correct. Now, yesterday, I actually explicitly showed Dale that I thought that the gold silver ratio was at an interesting juncture because it was back testing this multi-year ascending wedges support as resistance. And at least for the time being, it seems to have done the trick. So it's, we're getting rejected for now from there. Let's see if we can actually go to new lows from here. Might be the case. Now the EuroCAD question, and actually, I think we can speak about the Euro Yen as well, because I was looking at it a while ago. So yesterday, if you remember, I mentioned about the EuroCAD that, I expected a different type of behavior, but once we got what we got, I think that the path of least resistance remains lower. With the next support being a confluence actually of supports being at 143.88. So I think, that's where we're headed initially. And, let's see, we might be going a lot more than that. So Euro seems to be underperforming the Canadian as we speak. The only bullish observation somebody can make on this chart, but it's very weak evidence on its own, is some RSI divergence. There is nothing else that even looks remotely bullish on the EuroCAD chart. Now, another one you might like, actually, because we mentioned that some time ago. Actually, we mentioned that when we were back here, is EuroNOK, because, you know, I was talking about EuroNOK like, what was it, a week ago or whatever, perhaps more than that, saying that, you know, EuroNOK is again on a very, very key area. And, you know, if I zoom out as I did, you can see why, right? And unsurprisingly, because this formation has already proved its significance to the market, just look at this rejection. Now, would that make me bearish? No, because as once again this formation proved its significance by rejecting from resistance, it can as easily prove its significance by supporting there, and we might stay in this wedge for longer. I mean, there is still a decent width in this formation, so I see no reason why we can't remain trapped here for, you know, weeks, even a few months. One thing is for sure, one of the charts to pay close attention to, because I'm pretty confident that once this breaks, one way or another, there's going to be a squeeze. So, you know, either it breaks lower, I think, you know, EuroNOK is going to dump, you know, faster than people believe, or if we break higher, I think it might accelerate to the upside, you know, with, you know, producing some kind of an impulsive move. So EuroNOK, one to pay close attention to. It's probably going to be, not probably, it is going to be a blessing if it breaks to the downside, because you'll also have a positive carry going for you. So, you know, you will be able to hold short EuroNOK, getting paid in the process and making money at the same time by, you know, the movement of the pair. So, you know, that would be, for a Forex trader, that would be, you know, an ideal event. Euro-Mexican peso as well is one I was looking at. It's a little bit of a mess, but, you know, somebody had asked a few days ago about it. So, you know, if he's listening in, you know, quite a mess still. So I would be, you know, I would be looking towards the rest that we were looking for, especially EuroNOK, but, you know, Euro-MXN, you have better carry if it actually breaks down. But, you know, for the time being, I think this chart is, you know, chop fast. I would stay away from it. So two pairs I wanted us to have a look at. Euro yen, which, you know, after finding support at previous support area, broke above this descending wedge, but look at where we found resistance. This spike low that we had at the very, very beginning of the year is now acting as resistance. At the same time, this is a 38.2% fib of this last move lower. So, you know, I'm quite curious to see what's going to happen from here. I do think that if we actually break higher from here, there's going to be more upside coming. So even if we see like a little pullback, if we eventually break higher, I think we're going to retrace at least towards like 121. So probably, you know, not a bad trade if you want to buy the pullback, assuming that it's going to break higher from there. Now, if you see it completely fail from this resistance, I would be very, very careful. But I do think that it looks rather interesting, and, you know, depends on what happens tomorrow with the ECB. We might not even get a decent pullback. We might just straightforward, like, you know, push through resistance and, you know, go all the way up there. And the other one, which I keep failing to remember to mention, is Euro-Swiss. Euro-Swiss definitely in a decently prolonged downtrend. I mean, we found a high at the previous floor, acting in this case as a ceiling, in April 2018. We've been moving lower since. Worth noting, though, that we've now broken above both this recent range and this descending channel that was leading price action lower since this April. Okay, so we're facing resistance here, 1019 or whatever. But if we break higher from there, we might finally see, a little bit more of a rebound than we've seen since last April. Coach, do we have an interview today?
We do. Have an excellent Elliotician, works with Avi Gilbert, and Garrett Patton's with us.
Okay, perfect. That sounds great. Let's hear what he has to say.
Okay, buddy. Thank you for the update. You give one of the best reviews, even when there's not much to talk about.
Thank you.
All right. All right, Garrett. Welcome back to FACE. I'm going to make you a panelist. Whoops. Okay. No, I have to find the participants again. So next time, oh, there you are. Just leave the screen where it is while I promote him. Okay, Garrett. Let me unmute you. And this is a different platform that you're on compared to last time, Garrett.
Okay.
Okay, so if you just, welcome back, buddy. So if you just scroll, you'll see a green box that says share, and you click that, and then we'll see what's on your radar. Okay, it's coming up right now.
Did that work? Can you see my screen?
We got it, and you sound loud and clear. And
perfect.
What a great call you made in the minors, Garrett. I mean, what a tremendous run they've had, and we may as well start with what we have up here. Yeah, just one thing I do remember, and I want to know, and look, things always change day to day. We're always reassessing, right? So I'm interested in, I remember last time, correct me if I'm wrong, that you thought there was going to be a breakout. The breakout was like 1380, and I said, the whole world's going to love it on a breakout over there. And then you had a count at that time where it broke out and maybe went to about 1420-ish or something like that. And then it was going to terminate, which would make and pull back sharply, which would have made the 1380 breakout a false breakout. Do you recall that?
I do recall, yes, when we began to break out here and we were in the 1400 range.
Yeah.
It's potentially at that point was still just an initial wave one.
Okay.
Based on my analysis, had price been able to,
it was supposed to maybe complete a one and then pull back there. So as an Elliotician, what told you that wasn't happening once it took out the high, the move around what was it, 1430 or so? 1440?
Right. The opportunity to see that pullback was back in June and July during this consolidation region, and when it didn't end up breaking any support and pulling back, and instead just held that higher level consolidation, then that was the clue that it intended to continue higher immediately rather than resting first and then seeing that further upside.
Okay, so when you were in an area like that, because people are very proud when they make a great call, and people are even happier when they make a great trade. To me, the most difficult thing in the business is to have a great hold, right? Because, and it's not easy. I mean, I leave money on the table on every trade. And I was wondering, in that level, were you booking profits and then recommit? How did you handle it tactically?
The focus of our service is more on individual mining stocks.
Okay.
Rather than gold and silver themselves.
Okay, so you had a longer term, you weren't going to get out until longer term objectives were met.
Right. So even at that point, when there was the potential for a local top in gold and a possible pullback, many of the individual miners' charts still had some basically setups that allowed for further near-term upside, and those were the ones that we focused on. Now, we did start initially trimming some of the positions that we had in that region, and then continued to trim further as we pushed up into the recent August high.
Okay.
And now the recent high that we've seen is finally providing a pullback that we view as another opportunity to add to those positions again and put our allocation back near full 100% in the portfolio.
So 1420 is a region that you're considering in that box. What's the range in that box?
So between about 1470 and 1425 is the upper region of support that I view as a good level of support that would be ideal to hold, and therefore a lot of the individual miners, as we fill out this corrective pullback into that region, we will be adding back to those positions.
Okay, and because I do remember this chart that you have up here, people say, Dale, how do you remember these things? I guess I'm part elephant. So, anyway, so you have sharply higher objectives, and it looks like all the way out to, a Nostra patent call all the way out to 2021. Is that new highs for the move or under 1900 up there?
So yeah, around 1650, 1700 would be the next major region of resistance that I see.
Okay.
So assuming that we do hold this target support between 1470 and 1425, that's where I will be looking for price to head towards next before seeing another significant pullback.
Okay. I think you do things with time cycles. I've heard from a few people after while we were in the run up that there was going to be the entry for this pullback would be around the November timeframe. Any ideas on time? I know you do some fib time projections, don't you?
I actually don't rely heavily on timing projections. I do have these fan lines that you can see, the angled lines.
Yeah.
That I use as kind of rough estimations as where to place those labels, but I'm sure you're familiar. Early wave theory doesn't really have any sort of timing calculation in the method itself, and I haven't really found anything to be all that reliable and accurate. So, personally, for me, I'm much more focused on just price rather than any specific timing.
Any comment on the gold-silver ratio and the outperformance of silver in the last 30, 45 days? And do you have an outlook similar on silver?
It usually tends to be the one that runs later than gold. So gold usually tends to lead in these sort of situations.
Right.
When you see big moves and breakouts, and then gold, and then silver begins to follow. And that was pretty much the same thing that happened back during the 2016 rally.
Okay.
Into that July high. If you remember, during this portion between basically May and July, you saw some significant outperformance
in silver
from silver as well.
Okay.
During that same period.
Okay, so that kind of covers. Do you have a silver chart where we might be able to look at some pullback areas for buying? It looks like you have 16. Go ahead.
Right, very similar to what I was looking at on the gold chart. Just an initial A wave down so far, and looking for a corrective bounce next, so not immediately heading to new highs from here.
Okay.
Getting a B wave within this fourth, and then another drop in wave C, and the target support for the silver chart being between 1740 and 1676 here. Okay,
and you have 5 labeled as a C up there in silver, up around $20. Does that mean that would terminate the silver rally up there?
I'm a little bit more concerned when it comes to the silver chart, yes.
Okay.
Definitely we will be looking for that retest of the prior high that we got back in 2016, but we'll be very cautious how price reacts to that resistance.
Okay.
And if we fail to see any significant break above there, the potential, yes, for this to complete the overall basically rally and corrective bounce that we've seen since the 2015 low, and potentially resuming that larger bear market that began back in 2011.
Okay, any particular mining issues that you're tracking that you're looking to buy on this pullback, or do you mainly go mutual funds, or can you comment on individual mining shares? Or
yeah, some of the ones that I'm looking at as more immediate possible entries. EDV, which is traded on the Toronto Exchange.
Okay.
This chart is filling out what looks like a nice standard impulse off of the December 2018 low with the recent high completing wave 3 of 3 and price now pulling back and consolidating in wave 4 of 3 with target support between 24.24 and 23.12. So this one is getting pretty close to testing that target support, which would offer a decent entry for a move up to around 31 next. This is wave 5 of 3.
Okay. I also recall we covered the S&Ps. You said that's mainly Avi covers that, but I'm sure you have views on the S&Ps. And again, my memory, you were looking for a top. I think the level that I commented on, too many people looking for the same price. Usually what happens is it doesn't achieve it or it becomes insignificant. And I think you were looking for a short around 30.40, 30.50, and we fell a little bit short. Is it still a number of destiny, or do you think the highs will not be taken out, say, next week with the Fed? What's your take here?
I'm actually currently tentatively looking lower.
Okay.
But price so far has been fairly resilient with this recent. Many people would view it as a breakout above that 29.40 level.
Yeah,
I'm still viewing
3,100. So
as a possible bull trap.
Okay.
Many of the different charts did forecast that extension that we were going to get and this move up into this blue target box region. It saw a slight overshoot above that 764 retracement, but has since turned back down. And there's definitely opportunity, I think, to head steeply lower from here. But again, so far,
would a marginal new high change? Would a marginal new high change the count to an alternate?
It would, if we did exceed the July high, then it would, in my opinion, likely mean that our the higher degree primary wave 3, and that's going all the way back to the count from the 2009 low. So the large circle labels that you see here are that highest degree primary wave count within the impulse from the 2009 low, which means an extension, slight extension still within that primary wave 3. So I still think that there are quite a few charts out there that look like they're on the precipice of seeing a primary fourth wave correction, and that means some fairly significant downside in a lot of things over the next several months and even a multi-year correction.
Well, yeah, if we're going in that direction into the end of 2020, that could have some political ramifications, don't you think?
Yeah, it seems to be, if we do begin that primary wave 4 correction from here, definitely heading into November 2020 is potentially some sort of catalyst, obviously.
Yeah. Okay. So what else is on your radar that you'd like to share? And I respect your work. I'd like to add that I respect your work, and that's why I keep inviting you back.
Thank you very much. I appreciate that. We can take a look at some more of the individual mining stocks that I view as possible long entries approaching very soon here. So another one that we like on the site is American Silver, USAS, which also is filling out a nice impulse back from that December 2018 low. We trimmed when we hit 360, slightly overshot that fib to complete wave 5 of 3, and has since given us a nice flat consolidation in what should be a fourth wave. Ideally needing a little bit lower here to complete the C of 4, so between around 270 and 240 would be that ideal entry region to then set up a move up to just underneath $5 next to complete that 5 up off of the December 2018 low.
Okay, go ahead. You have another?
Yeah.
That one I'm not familiar with. Okay, gold.
Gold mining, yeah, some of these are some of the smaller cap mining stocks, but
a lot of them traded in Canada?
Yes.
Okay.
This one, yes, is also traded on the Toronto Exchange. They do have ADRs as well if you don't have access to that, but very similar kind of setup here. That same impulse and development off of the December 2018 low. You can see the 1-2 here. Price recently completing wave 3 of 3 at the September high and now pulling back and consolidating in what should be wave 4 of 3. So we've already hit the upper end of that target support at 116, and then down to 109 would be the ideal region to hold as this fourth, setting up a move to 165 following that as the wave 5 of 3.
You don't cover interest rates at all for your company, do you? Like the bond market, treasuries, or, I mean, you know, let's face it, we have never seen a financial landscape with this many instruments being negative yields, and, you know, people have been talking, oh, great. Okay, so this, you're looking at maybe the 180 level as a 4, and then you're looking, I remember, Garrett, yeah, you had, it was a surprising long-term target. So you're looking for lower yields first, then a pretty good bounce.
Right. So back in 2016, when we were looking for a bottom in interest rates and top in bonds, I was looking for a 5-wave move to the upside as what would be a C wave of this big flat here. So if you can see the 3 and 4 subdividing into an A, B, and C wave flat, filled up into the target region for that primary fourth. And then at the time when interest rates, you know, were supposedly the cause of some of the market downside initially, into that December 2018 low and January low. That is when I was looking for a turn back down and heading to new lows for interest rates and new highs in bonds, which seems like a bit of a crazy call at the time. Obviously, price hasn't disappointed since, and I don't think that the bond bull market is quite done yet.
Okay, so wave 5 is going to take it down to new historic lows in the yield because we stopped short of it a week or so ago. So you're looking for
at least in the 10-year, yes. If I'm not mistaken, I think the 30 has already hit new lows.
Yeah, that's right. So okay, so that's your view on interest rates. Can you cover?
Right. So it's about at the in the support region for that fourth. This is not the this is just something that's obviously tradable as opposed to the TNX chart.
Right.
In the support region for that wave 4 and setting up one more potential high as the 5th, then a much more protracted and deeper pullback as the wave B, and then that will set up the final run, I think, for bonds before putting in a very significant multi-year top.
Okay, interesting. So kind of what the read I get here is still looking for a severe correction in the S&Ps. With that happening, yields head down again. Gold corrective action that we have here. Any feel on crude, because it's been kind of married to the S&Ps on and off over the last year?
It's been quite messy as far as the subwave counts. It's been a little bit difficult, I think, to track on the smaller time frames. It still, to me, has not really suggested that price is ready to start a sustained rally that's taking us back above that 2018 high yet. I do think we'll eventually be breaking back above that high, but I'm just not convinced yet that the overall correction that we have down from that October 2018 high is complete. So I'm still looking for the possibility of this A, B, and C wave correction that can take us down to around $40. And that could coincide with the corrective primary fourth wave pullback in the overall market in equities.
Okay.
So it's at the point right here where either it needs to turn directly down and continue filling out wave 3 of what would be an ending diagonal for this intermediate or parenthesis degree C wave, or heading back to the July high and filling out a wider flat.
Okay, so if we went to Y, we could still, the bearish count could still be
right. That could just be a wider flat for this 2 rather than the wave 2 high already being in place at that July top.
Okay, so since our bailiwick here is currencies, could you cover a currency or the dollar? Any view on the dollar?
So the dollar is continuing to stretch higher in this overall rally that we've seen since February of 2018, but it's doing so in a very labored and overlapping nature, which to me does not suggest that this move is impulsive and really setting up new highs back above the ones that we saw in 2017 here, but instead that the overall bounce and rally is corrective. So there's actually a possibility for a top to already be in place to this rally is what I'm counting as a B wave, and that's shown there in blue. With the alternative, we cannot take out the June low if we get some downside traction going here, that this is just the top of wave 3, and we see another 4 and 5 before attempting that top and beginning to roll over.
Great views. And really, the whole jigsaw puzzle, really appreciate it. You have a great demeanor and calming influence in a volatile world, although volatility is a little compressed, even though the guys are back from the Hamptons. So thank you so much, Garrett, for coming back. Anything you want to wrap it with or show your website and how people could follow your elite analysis?
Yeah, well, again, thank you for having me. It's always a pleasure being here. And if you are interested in checking out more of our analysis, our site is ElliottWaveTrader.net. We have a live trading room and offer coverage on many different markets, from equities to Forex to commodities.
Yeah, I went to your website. It looks like you have, what, about 10 or so guys that work with your client base that all have their own specialties.
Right. I think we're actually up to around 15 or so overall analysts at this point. But yes, we've got everything covered. Whatever you like trading, I'm sure that we have a service that could.
You have anyone that specializes in the Polish zloty?
That I cannot say.
Well, let Avi know that I hedge my kielbasa with the zloty. So, Garrett, my trading warrior brother, I wish you a great fall trading season, which is coming up, and appreciate your views. And I'm going to be taking a serious look at the S&Ps going into next week. So, and if you're right, Powell's going to disappoint the market, and it's going to be a very interesting scenario. And again, congratulations on being there on this precious metal move.
Thank you very much.
All right, Garrett. All right, buddy. All right, everyone. Garrett Patton, and you can also follow Garrett at Garrett Patton on Twitter. That's a wrap. We'll see everyone tomorrow. ECB tomorrow. So get some sleep and put your seatbelts on tomorrow. And that's a wrap. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. You're very welcome, Nigel, Monica, and thanks again very much, Garrett. Adios.